Hey everyone, on today's episode, we're going to talk about how your construction company can cover your family's healthcare costs, how that becomes deductible to the business and not includable in income for you. So, we're going to talk about how this works, what the IRS allows, and how to go about setting things up. So, let's get started. Okay, so this is one of my more favorite tax strategies, and it's called the Health Reimbursement Arrangement. And what it is an employer-funded plan that reimburses employees, including yourself as the owner, for qualified medical expenses. Basically, in summary, instead of paying doctor's bills, co-pays, insurance premiums, all that, your business at the end of the day gets to weather all this and deduct it as actual business expenses when done correctly. And again, when done correctly, it becomes tax-free to you and tax deductible to the business. Therefore, it doesn't become an employee fringe benefit of any sort. It's not includable in income via W-2 or via like any other avenue on your personal tax return, and it's deductible to the business. So what expenses qualify for this? I'm going to put these down at the corner here, and we can take a look. So everyday healthcare costs like co-pays, deductibles, prescriptions, over-the-counter medicine, feminine care products, dental and vision expenses, chiropractic and physical therapy sessions, and even premiums for health insurance in a lot of cases. You can even run through these expenses for your spouse, your dependents, as long as your dependents are under the age of 27. So if your spouse needs a surgery, if your kids need braces, things like that, you could effectively have all this run through the business. Now, if you're an S corp, a C corp, or an LLC taxed as a corporation, this is a no-brainer. You would just set one up and you're good to go. You're good to, have all your medical expenses reimbursed, all that. One caveat I want to point out, if you're a sole proprietor, technically you're not an employee and that wouldn't cover you. However, there is a workaround. It's called this spousal exemption, where you can have your spouse become an employee of your sole proprietorship and have yourself and your dependents covered in that way. Therefore, the key here is that you're treated as an employee of the business and you're reimbursing yourself as an employee of the business. And to do that, it would require to have an actual entity set up in some way, LLC, S Corp, C Corp, one of these. But an LLC, again, would have to be taxed in a way different than just a regular single member LLC. Now, how do you have this set up? There's 4 key things that need to be required in order for this to become an IRS fully compliant plan. And I'm going to put those 4 down here and we can go over them one by one. So first, you need to create a written plan document. And in order to do this, you basically need to formalize the agreement. It's basically like employer-sponsored employee reimbursement plan. So there needs to be a formal document. I have as a bonus for my listeners, I have a template that I've placed down in the show notes that you can use and fill in the blanks pretty much to get this going, like for your business. Number 2, you need to have the reimbursement substantiated. So for this, you need proof, basically either receipts, invoices, bills, explanation of benefits. There needs to be some sort of a hard required document that proves what benefit was gained. You can't just say, oh, I went to CVS and spent $200 on this. There needs to be some sort of document that shows that this was actually a qualified medical expense. Number 3, you have to reimburse through either payroll or a check. So yeah, you do need to reimburse yourself. So in a perfect world, you're paying, again, out of your personal for all these expenses, and then you're reimbursing yourself from the business, either through payroll, a check, a Zelle, ACH, what have you, like one of these methods. You need to reimburse yourself. And then you need to track everything. Yeah, so again, usually with the tracking, what's involved is ideally you have a QuickBooks Online file, a Xero file. I've seen people maintain an Excel, though I don't recommend that. It's just way too manual. I would recommend going that extra step, paying a bookkeeper a couple $100 a month, whatever it is, to just have your general ledger like organized, get all that together. At the end of the day, you need the date, the description, the amount, and again, like the proof, kind of like we mentioned. So these four things: you need a written plan document, you need to have the reimbursement substantiated, you need to reimburse yourself, and then you need to track everything like in a very kind of organized way. Honestly, you can DIY this. You could set it up yourself. You can get the help of a CPA. You can have an HRA administrator, though that's a more expensive route, though it is a cleaner route. So again, I mean, it's a very fine line. You could be one of those. You could be one of my clients who has everything set up perfectly and properly, and God forbid, in the event of an audit, we just provide the formal agreement, any requested samples, documentation, receipts, and everything ticks and ties. And it's a matter of, the auditor check marking pretty much every box they need to, and, walking away, being on their way. Or, some people just run things like the wild, wild west, like through their business, and don't actually properly have things documented, have things supported, and then it becomes kind of like a situation where you're at their mercy, and you don't want to be in that situation. So again, to make full circle, you want to have a written plan document. You want to have the reimbursement substantiated through invoices, receipts, explanation of benefits, things like that. You want to reimburse yourself one way or another: payroll, check, ACH, Zelle, wire, what have you. And you want to track everything, either through QBO, Xero, Excel. A lot of my clients for this, they'll have a monthly Excel document where they actually write down all the health reimbursement accounts and the HRA itemizations, and then they make one transfer at the end of the month, and we record it into an actual like QBO account, for this. But again, as long as you have these four things covered, you should be good to go. So if you have any questions, feel free to reach out. I hope this has been helpful. Click like, subscribe, turn on notifications for any updates, and I hope to see you in the next one.